The Nifty and Sensex end with cuts for the second straight week, but midcaps have outperformed. Auto and pharma stocks have fallen the most. On today's edition of Editors Roundtable, we take stock of the week gone by, decode India's QIP fundraising spree, and put the spotlight on China's big equity rally. I'm Surabhi Upadhyay, and with me are editors Nigel D'Souza as well as Nimesh Shah. Guys, finally, thank God it's Friday. But I guess for the market, it's a bit of mixed feeling. We haven't fallen, at least the falling has stopped. But Friday, kind of put a lid on some of the recovery as well.
Well, it was more of a recovery as well in the broader market stocks. And that was a bit of a relief, Surabhi. Clearly, the kind of carnage we've seen in the broader markets, the mid-cap index down 20, micro-cap down 21, Nifty 50 down 22%. And after that, such a sharp fall, a bit of a respite was also helpful. So a bit of recovery in the broader market stocks this week. That was a kind of a relief. But if you ask me, we're still not out of the woods. So next is going to be crucial. We have an expiry as well, truncated week. So Wednesday we're holding a holiday. So that's a good news. But yeah, the pain doesn't seem to be over yet. And the overall feedback I'm getting is maybe till mid of March, you might see that pressure in the broader markets because of the leverage selling or whatever you call it. That might continue for the next another couple of weeks.
So maybe some more days of pain ahead, maybe.
Yeah. Well, and normally towards the end of March, we have that tax harvesting as well that we normally see. You know, since we're going to be looking forward to an India versus Pakistan game, I just put it in cricketing parlance. You know, if you're out of form, you could either try to smash it out of the park and maybe lose your wicket, or maybe you just try to guard your wicket, you know, hold on, maybe don't score too many runs, but at least hold on to your wicket. I would view this week positively in that sense, because at least we didn't give everything away. Yeah. Otherwise, you know, if you look at the stats, last 12 trading sessions were down, 11. So
Absolutely.
12 out of 13 sessions, you're in the red.
At least we managed to save the wicket.
Yeah, indeed. But let's take stock first of, what went on in this week itself. So a quick recap of what went on in the week. The 22,700 mark, well, that got protected yet again. And that's the quintuple low that we're talking about, because 5 times we've gone to that mark and we have not broken that particular mark. So the quintuple low is important. Just take a look at it in the screen. Less than a month, we have gone numerous times to that mark, and we have bounced off that. The markets this week, well, you'll see the Nifty, well, it ended mildly in the red. The positive is the mid and the small cap indices were up close to around 1.5%, and I'll take that positively. Another positive that I saw was select stocks. You have the promoters that are coming in there and chipping in. JSPL, the promoter, bought close to around 0.5% from the open market. Maharashtra Seamless, another smaller company, they bought close to around 0.5%. So promoters coming in there, showing the faith and trying to buy in some stock. Both these two stocks, by the way, had corrected close to around 25 to 30% from the recent peak. And, coming out there and buying close to around 0.5%, that's viewed positively. Besides that, the sector of the week was the metal index. Remember, it got smashed when we were seeing a correction. So pulling back some of those losses, you have the rupee that is relatively weaker. Metal stocks, they actually gain from there because to import your material becomes a little bit more expensive. And all eyes on what the government is going to do, what kind of protection we can see from the government of India with regard to the steel companies, because that has been the big cry out there, and many of them believe that it's in the offing. So metal stocks were the toast, this week itself. And, guys, the markets have been relatively underperforming, a little bit of a jittery. But a couple of positives on the economy perspective, and some of those fundamentals actually are looking better. One factor being, Pankaj Tibrewal in his note that he writes at the end of the quarter, he has said that the Nifty 500 companies, the earnings growth is 8.5%. That's better than Q1 as well as Q2. So that's one positive. The second factor is, the government capex has started picking up. That's good news. The RBI, they have addressed that deficit that we were seeing with regard to liquidity. The repo cut, you have the OMOs, you have the swaps as well. So that's taking care of that. And lower crude oil prices and well-behaved dollar index, you like that as well. And as most of the notes this week pointed out, that post this correction, and if you're factoring in the earnings growth of around mid-teens in the next 2 years, well, then the Nifty is trading a little bit lower than its long-term averages. Put all this together, market's jittery, but maybe on ground, some of those fundamentals have actually improved.
Okay, well, lots to track, and we have our guest joining us as well. We have Mihir Vora right here with us on Editors Roundtable.
Hi, Mihir.
Hi,
how are you feeling?
Not bad after such a lot of traffic.
I thought you would say not bad after this kind of market, but okay.
No, I really got stuck in traffic today.
But not
so is the traffic worse or is the market worse?
I always prefer the markets to be better.
But Mihir, what's the sense now? We've seen a much needed correction, so to speak. Mid-cap index down 20, small cap down 21, micro cap down, Nifty 50 down 22%. Yeah. What's your sense now? Given the earnings, given that there's a bit of ease of liquidity as well, are we done for the time being, or there is more pain?
I hope we are done for the time, because you mentioned how much the indices are down.
Yeah.
But if you look at the small cap 250 index, the median stock was down more than 35%.
Correct.
Even though the average might be 22, 23%.
Correct.
So it's been a quite a sharp, quite a brutal correction over the last 1.5 months. My guess is, all the factors that we talked about, the dollar, FII selling, little bit of cyclical slowdown, government ordering, all those did contribute. But if we are sticking to the 6.6% GDP growth target for FY26, then there is no reason to believe that this is going to sustain for a while. Because if 6.6% happens, then I think we have to be back on the cyclical uptick, and that's what the market should be responding to going forward. So I think the cyclical downturn has been discounted to some extent, to a great extent, I would say. And now if we stick to the 6.5, 6.6 GDP for FY26, then I think valuations are pretty much okay.
So, Mir, you'll be in the camp, since you spoke about traffic as well, and we're talking about the markets looking better, you would be in the camp that says that fundamentals, actually things are looking much better now in comparison to, say, a couple of weeks ago, because I was looking at even the fast-tag collections. In the month of January and February, it's improved much better. So that's telling you there's a recovery on ground. And we also spoke to an OMC IOC. They also said that demand is much better in quarter 4 in comparison to the previous couple of quarters. So fundamentally, things are improving on ground. And in fact, valuations as well are a little bit more comforting. Is that the take you would take?
Absolutely. So, in fact, valuations have more than corrected for the slight deterioration in fundamentals we saw in the previous quarter. This is the quarter ended December. But markets always tend to look ahead. And apart from the data points that you did mention, power demand also seems to have picked up power volumes. So I think, as I said, it was a cyclical downtake, and if we go for a cyclical uptake, then I think valuations are more than compensating for that.
So, Mir, then how will you position now? If you're expecting a cyclical recovery in the overall market economy and plus the earnings as well, and we've seen the correction in many of those sectors and stocks, how would you position now? What are the sectors you would bet on from here?
So I would really take a bet on financials to start with, because this sector has been the worst impacted not only in the recent correction, but it's over 1.5 to 2 years. And because of combination factors, RBI keeping liquidity tight, crackdown on unsecured loans by the RBI again, and the DXY anyway supporting a stronger dollar, leading to FII flows for a long period of time. And FII has maximum exposure in the financial sector because of the MSCI weightage of almost 35-40%. So we have seen the worst of selling as well as liquidity tightening impact on the financial sector. And when I say financials, I'm talking about the big NBFCs and big banks, private sector banks. And that, fortunately, is a big weight in the overall index, whether it's the Nifty 50 or Nifty 500. So I think that's one sector, the big NBFCs and banks to bet on. Again, base case being, we are in for a cyclical recovery. So that should be the first to do well in a cyclical upturn, both because valuations are good and we've seen the deterioration in fundamentals impacting this sector the maximum. Credit growth is the big thing to watch for. We went down from almost 14-15% credit growth to 10%. For a country like India with a nominal GDP growth of 10-11%, like 10% credit growth is like rock bottom, It can't go. If it goes worse, then we are in for trouble.
But that's improved to 12% now.
Exactly. So hopefully that's a cyclical recovery that we are talking about.
But speaking of course, market action, I guess some of the buzz in terms of fundraising is back. I mean, we're hearing about more IPOs coming to the market. There are some blocks that have started happening. Exactly. So that tells you that people are, slowly warming up. Yeah. So, Nimesh, what are you tracking this week?
Surbhi, given the kind of fall we've seen in the broader markets, I was just looking at the QIP data of last 1 year. In the last 1 year, the India Inc. has raised nearly 1.4 lakh crores by QIP. Okay. And of that, nearly 2/3 of the companies are now trading below the QIP issue price. So that's the startling data. 1.4 lakh crores raised, the value now is close to 1 lakh, which means they're down almost 27%. Having said that, there are some winners, some small winners, but there are a large list of losers as well. I'll first talk about some companies which are still trading above the QIP price, and the most notable name in that is Lloyd Metals. Nigel tracks it very closely. They raised up 1,200 crore QIP, and from there, the stock is up almost 71%. Coforge is another big name, is still up 69% from the QIP price. Likes of Wokhard up 25-26%, Sharp Metal is up 23%, and the likes of PG Electroplast and Polymedica. These are the only few gainers which are still above the QIP issue price. But the list of losers is quite large. As I said, almost 69-70 companies, which is 2/3 of the companies, are actually trading below their issue price, QIP prices. The notable names there is, for the first name is of course Zomato, one of the highest company in terms of fundraising, 8,500 crores that they raised. The stock is still down 8-9% from the QIP price. Adani Energy Solutions, that stock is down 31% from the QIP price. They also raised close to 8,400 crores. Warren Beverages, we all talk about it's a market leader in that space. Still, after the fundraising of 7,500 crore, is down 17%. Godrej Properties, Prestige Estate, the real estate names are down 20-25% from the QIP prices, and PNB is down 8-9%. So this is a broad list of some companies that I've identified. This list only is talking about companies which have raised funds over 1,000 crores. The list is quite large, and there are a lot of smaller companies which are down 20, 30, 40% as well from the QIP price. But I just want to give a couple of things, and then we'll ask Mir as well. See, the good part about it is that because it's a QIP, the funds have come into the company. So what we have to track is three things that the company can use for. One, are they paying off the debt? If they're paying the debt, you will see their impact in the very near future in terms of financials, in terms of bottom line. So that's something to track for. Or they can do a capex, the impact of which will come in the next 3-4 quarters. Or they may go for an inorganic acquisition or an inorganic opportunity. Again, that could be a bit of a binary event. But the fact is that the companies are sitting on cash after the money that they've raised by equity. So point is, one need to see whether there could be a kind of a fishing ground for a lot of the fund managers to look at this kind of a data for a potential winners in this list. Mir, coming to you, I just read out the whole list to you. Across sectors, across companies, we've seen a lot of stocks are down below the QIP price. What's your sense? Would you look at this bucket in terms of identifying opportunities in the very near future?
You mean the stocks which have done QIP?
Yeah.
Of course, definitely. Yeah. Because in most of the cases, it is growth capital. Yeah. Right, and by nature, at least our style is of growth investing. So we do like good companies which raise money for good purposes, for growth. I think that's definitely a space to look at.
One more thing, Mihir, that I wanted to sort of chat about, and this is latest data that came out from the NSE, their market ownership tracker. So we all know, obviously, FPI ownership has been going down. Domestic institutions have been, loading up on the market. By the way, the combined ownership, whether it's through the domestic mutual fund route or the direct route, people buying equities, that combined ownership of Indian individuals has overtaken FPI ownership of the market for the first time since 2006. It tells you about the huge churn that we've seen in the last many months. That's one data point. The other data point that I wanted to talk to you about was a reducing share of promoter ownership. Second consecutive quarter. Even for all NSE listed companies, that number has come down to, I think, just about 50, little over 50%. For the Nifty 50 companies, promoter ownership has now come down to about 49%. So promoters are selling, and Nimesh has been telling us about the selling, non-stop blocks, right, all through 23, 24. Is this at all a cause for concern, or is it okay? Promoters go, some strategics come in, and it doesn't really matter for shareholders. How do you look at it?
I think we've discussed this in the past. Yeah. I'm not too worried.
Okay.
And it is a function of price beyond a point. At a price, some promoters will come and send a bit of stake, probably for personal purpose, buying a flat in,
or bring it back into the equity market.
Something,
or bring it back into the equity market.
Equity market through their family offices. Yeah. A lot of people are doing that. Yeah. So I don't think it's a cause for worry. I mean, there is a bit of stake sale, but it's not something that I would say they're exiting the business altogether and not doing anything with the money.
Okay.
So Sylvie, just to add to your point on the retail ownership at the highest in the many years, the way to look at it is the corporate balance sheet is strong. The only leverage right now in the system is the retail leverage. The bank balance sheets are strong, government balance sheets are strong, corporate balance sheets are strong. And look at the kind of list I read out, right? Almost 1.4 lakh crores was raised by the corporate India. So even their balance sheet is strong in terms of having cash. The only leverage in the system right now is the retail participation.
The excessive trading leverage.
And that could be a bit of a scary in the very near term.
Okay, well, we have lots to discuss. Mihir stays on with us. We'll take a very quick break. After the break, I also want to put the spotlight on what's happening with the China market. While we are discussing a slowdown and a fall here, the Chinese market is soaring. So what's going on over there? We'll talk about it after the break.